let's talk about Airbnb. I don't know about you guys, but I've been seeing articles all over the place talking about the great Airbnb bust that is going on. Articles talking about how sellers are trying to exit their Airbnbs in droves in certain markets across the country. And although there is a lot of truth to that in many markets, I think the reality of where Airbnbs are at is actually quite a bit more nuanced. So in this video, let's go ahead and dive in and see if we can uncover a little bit more of the detail and nuance. And towards the end, I'll share with you my thoughts on the Airbnb market in general, as well as some of the great benefits that I'm seeing as a result of what's happening right now. So I'm going to go ahead and pull a lot of this information from AirDNA's website. They're a wonderful company that provides tons of data on the Airbnb market. I'll go ahead and link this down below if you guys want to take a look at it, or you can jump on their site and find it on there pretty easily. So the first thing we'll take a look at here is the US short-term rental industry outlook. And they have it going back here to 2020. And remember, that's when the pandemic started. And the first thing that really jumped out to me here was that the available listings have jumped up maybe 80, 85, 90% since the pandemic. So, I mean, that is a huge, massive increase in the number of Airbnb rentals. And what we'll look at a little bit later is that there was a huge demand during that time, and that demand has tapered off really substantially since 2020. And so in a lot of markets now, there's a lot more supply than there is demand. And that is what is creating a lot of these headlines and a lot of this weakness in many of the Airbnb markets across the country. And again, you can see here that there was a huge uptick in the number of nights listed, the percentage change. By 2022, there was a ton of additional supply listed on the market. And then obviously that's been kind of tapering off and is expected to taper off in terms of the forecast as we head into 2026. You could see as well, large amount of demand percent change on these earlier years. And then of course, the demand is starting to taper off as well. They're still showing positive demand percent change, but importantly, there are many markets where demand is now lower than supply. Also, we see that occupancy was 56.8% in 2020, then it jumped up to 62.2%, and then it kind of started tapering off 2022, 2023, and it's kind of been at that sort of 2023 level in 2024 and 2025 and is projected to be about the same in 2026. So obviously the occupancy rates have started to drop off, even though the number of active listings has skyrocketed over the last 4, 5, 6 years. And here we can look at the average daily rate. So the average daily rate, I mean, across the board is very low in terms of the percent change in what you're able to charge. And obviously this is starting to create some of those headwinds because you're not seeing those extreme increases in what you're able to rent these Airbnbs for in many places. And this next one here, RevPAR, revenue per available room, does a bit of a better job telling us what's going on compared to just occupancy alone, because it's actually a measure of the revenue earned per night, whether your unit is booked or not, giving us a better measure of the actual performance. And you can see here in 2020, there was a huge percent change increase in revenue per available room. And then 2021, it skyrocketed. But then look what happened. In 2022, it was negative. 2023, it was hugely negative. And now it's just been kind of creeping along here in this 3% average range and is projected to do about the same into the future. So we're no longer seeing these huge increases in revenue per available room, whether the room is booked or not any longer. And this is also contributing to a lot of the weakness in many markets around the country. And I want to take a moment and say that whether or not these Airbnbs are profitable for owners in different areas heavily depends on when they bought the Airbnb, what the prices were when they actually made the purchase, as well as what the interest rates were at the time, because this ultimately affects their cost structure on the property and will have a lot of influence on whether or not the property is going to be cash flow positive or cash flow negative, even given the weakening rental rates and occupancy levels, which a lot of markets are experiencing. And real quick, I want to say, if you happen to be here in the Los Angeles area or North Orange County and you need help with real estate, reach out to me, let me know. Or if you need a referral to a really good agent in your area, anywhere else in the country, reach out to me as well. My contact information is down below. So the next one we'll take a look at here is growth in available listings, and they're projecting that this should stabilize by the end of 2025. You can see here that there was a lot of growth before the pandemic in 2019. Then obviously the available listings growth went negative during the pandemic. And then it shot up. You were seeing 20% growth in some of these years, which is just massive growth in the available listings. And now it's kind of tapering off and hovering right in this sort of 5% range. So it looks like they're projecting there will be continued growth in the number of listings, but only at 5% a year, which is obviously quite a bit more manageable than these higher levels for several years in the 20% range. And the next main factor that's extremely important in the consideration of whether or not Airbnbs are sensible from an investor standpoint and a cash flow standpoint is ongoing regulation. And the regulation in many markets around the country is continually shifting. In many cases, it's getting much, much harder and more restrictive. All kinds of things are happening, like a limited supply of permits, the requirement that if you're going to have an Airbnb, you have to live in the property, meaning you can't have these absentee owner Airbnb properties, and a host of other restrictions or increased taxes on Airbnb rental property owners that are making it more difficult to own Airbnbs and also reducing any cash flow that you may be receiving currently. And as these regulations continue to become stricter and more difficult to comply with, or the number of Airbnbs are limited, we would expect that in those markets, that would help to support higher prices or stable prices in terms of rental rates. But that said, we've seen such a huge growth in the amount of supply in listings in general that there may just be an oversaturation and an oversupply in many markets across the country. So you have to really look at the specific market if you're thinking about being an investor and consider the supply and demand in that particular market, as well as the regulation landscape and how that's going to affect you, and then consider the purchase costs given the prices and interest rates, and then try to anticipate your cash flow expectations, and then of course model out the increases in expenses and costs over time and how that compares to the increases in your rental rates and also your occupancy levels as forecasted into the future. And here we see that as a result of a lot of that regulation and those natural disasters, available listing growth is slowing across all location types. So coastal, we're seeing a slowdown here from these 2022, 2023 levels going forward into 2026. Mountain and lake areas, again, we're seeing that slowdown projected to drop off quite a bit to 2.5% by 2026. Large city suburban areas, same thing. We saw massive listing growth here. Obviously, a lot of these markets probably are in oversupply now, and that's going to be projected to drop off. Here, large urban city, same thing, massive growth here to fill in that undersupply in 2020. Growth was as high as almost 20% in 2022, 15% in 2023, and then that's expected to drop off substantially. And you can see here similar things going on in the mid-sized city and small city rural. Small city rural seems to be still pretty strong in terms of the listing growth, but dropping off substantially from these very high levels in 2022, 2023. And so the next thing that's really interesting here is that they're projecting occupancy to return to the 2018-2019 average by the end of 2026. And that kind of makes sense. I mean, what we saw is obviously kind of a year, 2 years into the pandemic, everybody had, massive cabin fever. They were obviously getting tired of being stuck at home. And so they wanted to get out there and travel. And so there was a very large uptick, as you can see here, in the occupancy levels that were going on at the time. And then that gradually started to decline towards the end of 2022, 2023, into 2024. And it actually went below that sort of average from 2018, 2019 back here. And they're projecting that at the end of 2026, we're going to kind of be back towards that sort of long-term average. And what that means is that for many markets, if there's an oversaturation and an oversupply that built up because of this massive spike in occupancy and demand back here, there's going to be a lot more rental properties that are just sitting vacant that have lower occupancy levels on an annualized basis. And that's going to put downward pressure on the prices that these owners are going to be able to charge in these areas if there is oversupply and oversaturation. This one's interesting as well. Regulations create setbacks and opportunities in urban markets. And this really paints the picture of what the supply-demand landscape looks like in many areas. And And quite simply, if there's a lot of regulation or limitations on the number of Airbnbs, it is likely in those markets that there's going to be a limited supply and a much higher demand. And that is going to be very positive for rentals in those markets if you can actually be one of the owners that gets a permit or is allowed to have an Airbnb in that space. Or if you have to live on the property in order to rent it out, you happen to have extra space that you can rent out for your property and so on. And here you can see San Jose, Palo Alto, there's a lot more demand than there is supply in that market. New York, very similar thing. Seattle, similar. But then you get into these other markets where the opposite is the case. You have a lot more supply than demand here in Chicago. Same thing in Washington. Looks like Nashville, Minneapolis, Denver, San Antonio, Boston, etc. So this is going to mean in a lot of these markets, there's going to be downward pressure on prices. There's going to be a lot of owners that are not doing as well as they would like to be. And so the properties that are going to do well are going to be the nicest properties that are priced the best in the better areas, so on and so forth. And the last thing I want to share with you out of this AirDNA market report is this idea that regulations that limit supply can benefit existing hosts. And so this chart here shows the revenue per available room. And you can see here very clearly San Francisco, San Jose, Atlanta, Seattle, these areas probably have the highest regulations. And as a result, they have a very positive year-over-year change in terms of the revenue that people are collecting on the available rooms. But as you get into areas that have less and less restrictions, then the supply obviously can grow faster of the available Airbnb rentals. And so you start to see less positive results from that less restrictive supply from government kind of getting involved and preventing a lot more Airbnbs from being on the market. So what does this really all mean? Well, if you're an investor thinking about getting into Airbnbs or you own Airbnbs now, it really means that you have to be very cognizant of what's going on with all these regulations, with the supply of Airbnbs on the market, with the rental rates and the occupancy rates. And you also have to understand all of the costs and expenses of owning the Airbnb and anticipate what's likely to happen in the future in terms of additional restrictions, additional expenses that may be somewhat unpredictable today. And I want to say here that I know several Airbnb property owners that are absolutely crushing it right now. So there is definitely markets that are still super hot where there's massive potential to make a ton of money, but there are also lots of other markets that aren't doing as well. And the last thing I want to share with you is the incredible benefit that this is actually presenting for a lot of people out there. And what I mean is that if you're a buyer and you're looking to buy a home, a long-term property, somewhere that you want to live, I haven't really seen a time in my career in real estate where opportunity was as good as it is now. And in the markets where there's a lot of Airbnb owners that are scrambling to sell, that are motivated because they're negative cash flow, that can present an excellent opportunity for you as a buyer that wants to live in the property to get in there and negotiate an incredible deal. And additionally, a lot of these Airbnbs are in beautiful condition. They've been meticulously maintained. And so these can be great properties to get into if you're a buyer and you happen to be looking. And there's all of a sudden a lot more supply on the market of these really nice properties from desperate sellers that want to get out in a rush. All right, I think this wraps up this short summary on the Airbnb market. Let me know down below in the comments what you're seeing in your particular market. What did I miss here today that maybe I should have talked about? Let me know that as well. If you haven't already, please go ahead and hit the like button. Definitely subscribe. It helps a lot. And I appreciate you guys watching. I look forward to seeing you again on the next video. Take care.